So in this video, we are going to talk on high probability fair value gaps, right? Whatever I'm teaching you is working 100%. I've been actually analyzing what is happening into the markets, and I've been watching markets for 5 years, for maybe 4 years. The things I've been getting on the daily basis, I've been exercising my eyes to get these things, right? And a lot of things I've been learning from ICT himself. A lot of things belongs to ICT, not me, right? So the high probability fair value gap, simply before understanding high probability fair value gaps, we must be understanding what is actually a fair value gap. So a simple, easy explanation, a fair value gap is a 3 candlestick pattern, a gap between the high and the low of first and third candlestick, right? We have the gap we would be understanding, right? So high probability fair value gaps. A buy side fair value gap in the premium zone acts as a high probable fair value gap. A sell side fair value gap in the discounted zone acts a high probable fair value gap. A buy side fair value gap that has higher resistance liquidity, stop rate below, acts a high probable. And a sell side fair value gap that has high resistance liquidity, stop rate above, acts a high probable. A fair value gap that traded in the fractal time window acts a high probable. Now what I'm talking of the fractal time window. The fractal time windows are the macro timing window, or you can be either using kill zone time window to see the fair value gaps, which are the high probable fair value gaps. So let's go into the chart examples. A buy side fair value gap in the premium zone acts a high probable. Now what does it mean? Simply, if you're looking up at this, we have this swing low, swing high. We should be measuring price to see if the fair value gap is in the discounted zone or premium zone. You just put the Fibonacci tool, or even though you can be using the gain box, right? So we have this fair value gap right there, and we have this fair value gap right there. But if you look up at this example, this is the same, right? So this was also the fair value gap, but price has not respected that. Why? Because this was not below 0.5 level of the gain box, right? If you look up at this, sometimes price failed to actually go for the 0.5 levels, but it is high probable. If you look up at the price creating 2 or 3 of the fair value gaps, you simply look up at this 0.5 level, because this is the discounted level of the price. So a sell side fair value gap in the premium zone acts a high probable. So let me show you the example. So we have this 2 of the fair value gap, right? We have this fair value gap, also this fair value gap, also we have this fair value gap, right? So we want to see price go simply above 50% of the fair value gap. You simply should be picking the one fair value gap which is above the 0.5 level. So this is the nearest fair value gap which I'm going to pick, and then we'll be looking for the short positions. So we have this chart draw, right? Measuring the 50%, we have simply hit the fair value gap which is above 50%, and then we are simply going down for the sell side momentum. Let me show you the example. So now a buy side fair value gap that has high resistance liquidity, a stop rate below acts as a high probable fair value gap, right? So now if you look up at this example, we have simply hit the forward bullish order block. We simply have took out these stops, right? And then if you look up at this fair value gap, also we got this fair value gap. So we want to actually measure the price swing from this swing high and low. We have this high resistance liquidity via it, because we have been going to the upside and price has the fair value gap below it, right? So this is the stop rate, which we call the high resistance liquidity. So let's see what is going to happen. So if you look up at this, simply have rated the stop losses, and we hit the fair value gap, right? Now a fair value gap that traded in the fractal time window acts as a high probable fair value gap. So let me show you the chart example on the trading view live chart, right? Understand it better. Yeah guys, so this is the chart example, right? We hit simply the high time frame level. We have rated these tops, and now we want to see price to go below, because our drawn liquidity is for going for sell side momentum, right? So we want to see this high should be protected as to go lower. We are in the kill zone time window. We have this premium fair value gap. We should be shifting from it. If we are going lower, shifting the market structure. Let's see. So now we simply have created the fair value gap right there, right? If you see, so we simply have created this fair value gap. If we are measuring this fair value gap, right? So let's see if we are taking the gain box to measure it, which is this. So simply measure this fair value gap. If we trade this fair value gap, this would be in the premium zone, and also we are in the kill zone time window. So let's see if we are going for the New York time window to be filling it, and then we'll be looking for the sell side momentum of the price. So let's see, this is our premium fair value gap right there. Simply changing the color of it. Fair value gap right there, just middle line. And let's see if price is going to trade it. So simply we just simply took it out. We want to measure it again. Why? Because now we have created this swing, not this swing. Okay, so this is also in premium right there. And then let's see what is going to happen if price is filling in, going down, right? So we are right now in the New York kill zone. Let's see if price is filling it in the kill zone window or not, right? So let's go. So simply we just have filled it in the New York kill zone time window. So we want to see price to go down and take out these lows. Why? Because we are in the premium zone of this fair value gap. If you look up at this low, right, we simply have shifted the structure. And also if you look up at this low, which is the swing low, we simply have changed the market structure, right? So we want to see price to move lower and to take out these lows. Let's see what is going to happen. Yeah, so this was the example. We simply have followed this fair value gap and we have been going down.